I like how we vibing. 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 I like how we vibing.
This video is sponsored by our channel sponsor, which is 015. You can find them on 015.co.za for some premium web hosting from as little as 45 Rand 90 cents. I mean, 45.90. Think about it. That's not a lot. And you will get some premium domains. And I personally would advise you on getting maybe the Supreme or the Executive packs, because it comes with a lot of benefits and a lot more storage. And you can host multiple websites on one package, you know. And this is, since we are talking businesses and growing your businesses, you can actually get your business registered by them. And there's some benefits, you know. You can get a name reservation, company registration, a certificate, income tax number, and you can even get a free.co.za domain if you pick one of the higher packages, or you can get a free QuickBooks subscription for 3 months. For 3 months. Yo, that's nice. You know, that's really, really nice. And if you want a website, they can actually develop a website for you at a very affordable rate of starting from 2,100, excluding VAT, I think. But it's not a lot. Think about it. 2,100. You spend a lot more on other things. But yeah, and once again, executive plans and supreme plans, you literally get free domains. They, for the first year, they are literally out here trying to win you guys over. Anyway, let's continue with the video. On this week's Tax Talk Thursday, we're going to be talking about employees' tax, also known as PAYE, or pay as you earn, which is what they deduct from your salary. You know that section on your paycheck that says PAYE? This is what we're going to be talking about, figuring out how they calculate it and all those things. So yeah, let's get started. Employees' tax is required by law to be deducted by the employer from your remuneration as an employee. And it has to be paid over to the receiver on every, I think that by the 7th of every month, they sort of have to pay and submit their EMP 201s. But your employer is supposed to pay your pay as you earn to SARS. The process is known as PAYE or pay as you earn, which I've already said, highlighted. How is your employee's tax calculated? It's very important to know how it's calculated, you know, so that you can sort of figure out if you are underpaying or overpaying your taxes throughout the year, and when it's time for you to submit your taxes, you're not surprised, you know. So yeah, there are 2 methods to calculating your pay as you earn taxes, and these methods are as follows. The periodic tax basis. This method calculates tax on each pay slip in isolation using the monthly tax table. You can get those from your softwares that you're using for payroll or even SARS. The tax averaging, this method calculates the tax using employees' income for the entire year to date, which is then converted into an annual equivalent. So let's say 6 months into the year, you've made about 100,000 Rand. You then move over, and then in order for us to annualize it, we'll just say 6 months, 100,000 times it by 2 gives you 200,000. That's how much you've earned, and that's how much you're going to be taxed on. But we're going to do examples now. The annual equivalent calculation. Before we can calculate our final tax payable amount, we need to calculate the annual equivalent income by annualizing the year-to-date income earned. Like I said, if you've after 6 months you've earned 100,000, we need to annualize it, so convert it to 200,000. The tax amount is the tax amount is then de-annualized to get the tax for the period in question. So let's say June, for example. Well, 6 months from March, 1st of March, let's say August, end of August. That would be the period in question. The annual equivalent amount is the average monthly salary multiplied by 12. For example, if you earn 15,000 per month in March and April, and then 17,000 in May, the employee's year to date income would be 47,000 rand. And then you would annualize that. You'll get, and then the annual equivalent in the month of May would be calculated as 47,000 rand divided by 3 times by 12, which would then give you 188 rand. 188,000. Sorry. So alternatively, you can take that 47,000 times it by 4 and you would get the same figure. But that's how you calculate the annual equivalent for the month of May. That's if your salary is not consistent, like for example, here in May you earned 17,000 rand, so it's not consistent. The calculations are not always so basic. Sometimes the employee receives irregular income such as bonuses, commissions, and all those things. Unlike regular income, irregular income is not annualized, and where an employee receives regular and irregular income, the irregular income is added to the annualized regular income. We're going to calculate that also, but it's not as complex as it sounds. It's quite basic actually, trying to figure out if you've got a bonus. Sometimes they say this is something that I've actually seen among some of my friends. They will get a bonus, and then the tax on the bonus for that month would be so high. They'll be like, what was the point of me getting a bonus, as half of it is going to be taxed? So yeah, the two annualization calculations must be performed. Two of them, they need to be performed. You're going to annualize the regular income, and then you're going to annualize total income, which is annualized regular income and the irregular income. Sounds like a lot, right? But it's basically, you figure out what your annual income is at that point. For example, in May, we had calculated that the regular annual income would be 188,000 rand. And then let's say you get a bonus of 50,000 rand. You're going to, 22, let's say 12,000. You're going to add them together and you're going to get 200,000, right? That's basically the easy way of calculating it. The tax is then calculated on each of the above mentioned amount, and the difference between the two tax figures is the irregular income. I'm going to do an example now, so don't stress. There will be an example. In order for the total tax for the period to be calculated, the annual tax on the regular income is calculated back to its equivalent for the year to date for the period. So it's the annual tax divided by the month times by the months that they employ, divided by 12 times the months that their employee is employed. So let's say you were not employed for the full year. You will then divide the 188 divided by 12 times it by 7. Simple as that. The irregular income tax is then added back to the regular income tax to get the total tax that you will be paying. Simple, right? Well, yeah, I feel like it's simple. Let's show you an example. Let's say your year to date regular income is 15,000 rand. Annual equivalent is 180,000 rand. Tax calculated based on the tax table, 180 times 18% gives you 34,000 rand. The PAYE on your regular income would then be 2,700 rand, because you'll take that 32,400 divided by the months that you are employed, or basically you'll divide it by 12 in this case, kind of. You basically are going to divide it by the months that you are employed for at that point. So yeah, let's say it was 7 months in this. Let's say it was 7 months here. You say 32,400 divided by 7 months, you'll get, they pay you on your regular income. Not too hard, right? I don't think it's hard, but let's move on to the next slide. The irregular income for the year. You will then take your projected total remuneration, which is your regular plus your irregular. So the 180 from the previous slide plus the 30 gives you 210, right? And based on the tax table, this is how you'd calculate it, and it will give you 38,128 rand. Excuse me. Pay as you earn on regular income, on the irregular income, would then be the 32,120 that we got in the previous slide, minus, the 38,128 rand that we just got above, minus the 32,400 that we got in the previous slide. So it then comes down to 5,728 rand. That's how much tax you would be paying on your irregular income, which is crazy, right? If you look at how much tax you paid on the previous one, you paid 2,700 just for that month, and then for your irregular income you pay like 5,728 rand. That's heavy, right? So basically you would add these two amounts together, meaning your tax would not be 5,728 rand. No, it'd be like 8,000 something rand. Now you understand why people get mad and be like, why is my tax high this month? That's why it's so high. So the tax for the month, the pay as you earn for March, pay as you earn on regular income plus the irregular income. So the 2,700 plus the 5,728 rand gives you 8,428 rand. That is a lot of tax to be paying, right? Quite easy, but that's how you calculate it. And don't stress, I'm gonna have these slides available for downloading, so you'll get them. And yeah, thank you. Please don't forget to check us out on Instagram, the Com Clinic ZA, the Compliance Clinic on Instagram, mcponline.co.za. That's where we are currently building it. Maybe by the time you watch this it'll be done or not, but we're currently building the platform. Anyway, thank you, peace, love, and prosperity.